I hope you're having an amazing day today, and if you traded, were very successful. As always, I'm going to be going over the S&P 500 E-mini futures for today, Thursday, June 5th. I had a very big learning day today, but honestly, when I have a losing or learning day, I've grown to like it a lot because, if you beat yourself up over your losses, you're not going to get any better. Um, So I learned a lot today. I learned a lot of really great lessons that I'm going to be able to incorporate into my trading and make me even more profitable and better and be able to trade even higher volume and be able to trade even when there's more volatility as well. So good learning day. Please learn from me. And before I get started, as always, Al Brooks' course will be down below. Huge shout out to him and a massive shout out to my mentor and teacher, Troy. If it wasn't for him, I wouldn't be trading. Um, so just to get into it, I'm going to try to make today's quick. As always, starts off with two big bear pushes down. It was early in the morning, but this is a huge distance factor. Yeah, there are micro gaps. There's a couple tick gaps, and you know, two gets a good close. One's a little dodgy, and it's really early. But I really had the thought process of maybe selling on three. I really thought about it. And of course, looking back, it would have ripped for, 19 to 20 points. But having it so early in the day and being this volatile, it was hard to take. But I should have maybe trusted my gut. Bounces off the EMA, reversal, rejection, pullback failure. Would have sold the close of three, and you clearly get a good rip down. But you get two pushes down. Maybe this might be creating a bear channel. On the 15-minute chart, you can see that this is two very big bear bars down. So this very well could be creating a bear channel with these two pushes. You get one, pull back two. Then it goes kind of sideways, and this kind of breaks out of the channel on 8 and 10. And then you get a massive reversal with bar 11 and 12. And bar 11 and 12's IVS were just off the charts. First of all, 11 breaks through the EMA and closes with a very good close on its high. And then 12 is amazing follow through with, I think, in the 90s of IBS with the close. You get tick gaps and a huge micro gap on 11. So you can just see that this is a huge momentum shifter. And yes, you have one, two pullbacks down, but you have a double bottom on 8 and 9 here, and you get this massive rip up. Very likely that we're going to see a trend reversal and a second leg up. Like I said, 11 and 12 are just huge momentum movers. So maybe a little prematurely, I wouldn't have gone into this trade if I saw the full pullback on 13. But I had my stop or I had a limit order at the EMA. I thought with these strong of bars going up for over 15 points, that it was going to reject the EMA, maybe get a small pullback failure, kind of like on 3 earlier in the day, and continue to go up. So of course that hypothesis may have hurt me a little bit, but I didn't wait for it to close, and you get a very deep pullback on 13, probably just because the bears have been winning today. They weren't sure why we got this great reversal from the bulls, and they're trying to fight back down, thinking that maybe this is just a deep pullback for this first leg in the 15-minute chart, and it needs a second bear down. But as you can see, 14 really tries to break through, and I had my stop loss at the bottom of bar 11. Looking back, I should have had it at the wick of 6, but that was just a learning moment. Kind of have to have it at the bottom of the trend to be able to really sit through a deep pullback like that. So once I saw the deep pullback, I probably should have moved down my stop loss a little bit, but I got stopped out for a full 10 points on 14, which wasn't the best way to start the day. Definitely when it ended up, my hypothesis ended up working. So you get one deep pullback, two, another pullback, and even a third leg up. And you see 17, 18, and 19. It's a 3-bar micro channel with a great micro gap with basically all these closes on their high. And it's 14 points up. So, of course, you have to already consider that it's been 1, 2, 3 pushes up, now creating this bull channel. And, I had very good patience. I was already down. I didn't want to, risk anything to go down more. definitely on a risky trade, hoping for a fourth leg. But actually, on this pullback of bar 20, the news came out that the United States of America and China were going to resume um, trade talks and try to work some more deals out. So I thought that this was probably a um, a long, like a fire sale for long, basically a very strong, news indicator that this trend was probably going to continue. So I looked at 20 as probably a discount, because I think it was inevitable that this trend was going to resume. It has three pushes up, creating a bull channel, like I said, and the bull channel hadn't been broken yet. And then we get some really good news that's definitely going to impact the market. So I got in at the close of 20, and of course, it kind of gets its final rally up. Um, and actually, talking to my mentor, Troy, he said that this was actually a third leg. So I was kind of betting on a third leg here. Once again, I don't think it was the best trade. Very risky. I just saw the news and thought that this was going to have a little bit more of a resumption, trying to break through the previous day high at least, maybe try to get to the pre-market high. Um, and you can see that 16 isn't really treated as a pullback on this chart. So you kind of get one pullback, two pullback, three. 16 is kind of just more of a pause in momentum than an actual pullback. But yeah, so you have this big bull channel up. So you have this two pushes down, trend reversal, four pushes up, and then it kind of starts to go sideways. And I kind of had the hypothesis that if it didn't get to the pre-market high on good pushes with maybe a little pullback here on 25, 26, and then gets a continuance into this channel, that I was going to try to get out as quickly as I could. So I got out with my full 10-point loss from earlier. So I got out for a full 10 points here. So I was break even on the day. And then, the day just kept on getting crazier and crazier. You have this sideways trading range channel, kind of just going sideways, bouncing up and down, trying to either decide if it's going to break back up and go back into this bull channel that it had in the day, or maybe get some rally from the bears earlier this morning and try to get a push down, try to fill some of these micro gaps. And of course, you get another trend reversal, 32, 33, 34. Great three-bar micro channel down. I was a little sketched out by 34's wick and then following it 35, because if you look on the 15-minute chart, after this huge rip up, you could have say that, this is 10 is a pullback, 11 tries to pullback failure, second leg incoming for the bulls. But even with that being said, I thought there was a lot of momentum to the downside. And when 36 I've had a limit order again at the EMA. It rejected it one time, thought I was going to reject it again. But clearly, like I said, I was pretty risk adverse in this trade. I thought that the 15-minute bulls might need another push up. I didn't really like the wicks. I didn't like the sideways movement from, 34 long wick, 35 very doji, 36 a little pullback. And of course, it ends up dumping. But I got out on 37 with up about 2 points. And if I would have stayed in, I would have been able to make, 20 to 30 points. But for those reasons and kind of for this, I thought it was maybe going to go sideways and then continue up. I tried to get out as quickly as I could once it kind of didn't go my way, but I probably should have waited and seen at least one more bar, and then I would have stayed in. Going back, so then you get one pullback, two pushes down, and then you kind of get another trend reversal. And you could even say that this is just a deep pullback on the 15-minute chart from 11 to 14. You can see that it basically tries to push through the EMA, rejects it, kind of pushes right up to that 55% pullback level, and then dumps again. So you could say that this reset the leg count, this bull channel up with some implied pullbacks, maybe one implied pullback, deep pullback on 5, and a second leg up. And then you get one deep pullback on 15, 16, 17, and then another push down. So I did not see this, and I wasn't looking at this. So this is where we go into my learning lesson of the day. So we get these great pushes up, 44 straight, very, very strong micro gap, huge. Like I think this was 100% IBS on 45 with a massive micro gap, tick gaps, 3-bar micro channel. Yes, 43 doesn't start off the greatest, but this has a ton of momentum up. Thinking that maybe this is exhausted, 2 pushes down. 41's very exhausted. 42 does get a good close, but I wasn't really looking at that in the moment. I wanted to get in on 46 and didn't, so I think that's what kind of caused me to get in. But once it pushed through the EMA, I thought that this was a big momentum indicator. Maybe this was an implied pullback on 48, and it was going to try to fill some of these micro gaps, maybe push back to the high of the day, maybe back to the previous day high. That's where my take profit was the previous day high. So I actually entered in another contract once 51 closed above the EMA too, because I kind of thought, okay, I broke through the EMA, it's trying to push back, it's failing, might try to push back again, tries to push back on 52. And this is where I had my learning lesson. Usually I'm really good about when trades go against me. So like when 52 and 53 close below the EMA, showing that there is momentum going downward now, that I should have gotten out. I should have definitely gotten out at 53, could have even gotten out at 52 for probably break even. But I have been doing some back testing and watching a lot of world-renowned traders that usually stay in positions, and even if it goes against them, they just continue to buy more contracts so they can get out at a better just break-even point. So I decided to actually test that in real-time trading, and it didn't work in my favor. So I'll get into that. So you get 52, 53. This could still just be a pullback of this leg one here. Once you get 54, you are now knowing that this is not just a pullback, this is a trend reversal. This is a very strong leg. And as I said, I wish I would have gotten out on 53 for break even once I saw it close below the moving average. I think that was a momentum indicator that should have clicked in my head. That would usually click in my head. I think I was just a little distracted while I was in this trade, actually. And then once 54 ripped down with very strong IBS with a huge micro gap with a great close, now creating a 3-bar micro channel, I could have reversed my position right here. So I could have reversed the 2 contracts I had in, and at its lowest 28 points, I would have not only made back the small loss that I had on this, but probably would have been able to make 10 to 15 points. So that was another exit. So I could have exited on 53 for break even, could have exited, or I could have reversed on 54 and made profit. But I decided to do what I'd been researching a little bit. And when 54 happened, I waited, and then 55 broke down, and now you're kind of really worried. This is now a full reversal. You could say that this was just a pullback from this bar down, like I talked about in the 15-minute chart. This could just have been 1, pullback 2. So I started to incorporate what I'd been trying to learn a little bit that I'd never done before, only a bit in backtesting. And I bought a contract at kind of the close of 54, expecting this maybe to get a reversal and I could get out break even at a better point. And then I also bought the close of 55. So I bought the close of 54, the close of 55, and my stop loss got hit on 56. So clearly took a huge loss, the biggest loss I've ever taken before, but it was a learning moment. I know now I'm only going to be willing to scale in one time, even if a position goes against me. And I've talked to you guys about it so much. I only like scaling in when you're in a winning position, but a lot of people like to scale in once they take a big loss to try to get out at a better break-even point, which it actually ended up working. And, if I would have had a larger, very, very large stop loss, or maybe no stop loss at all, I would have been able to get out break even on this basically pull back up. If I would have stayed in on both of these contracts, including these 2, I would have been able to get out break even or maybe even up a couple points on 62. So the method that I tested today in real time did work. It just wasn't for me. Well, it's not for my trading style. I wasn't willing to do that, and I like to be very, like you guys know, I like to be very risk adverse. I like to only take very small losses, and if it goes against me and works out, it happens. But I would rather have really, really good risk management than be able to catch a massive trade, even though my risk management was awful. And then you get this, I think this resets the leg count, this pullback. And yes, you could say on the 15-minute chart, this is one pullback, two. But you get this kind of doji pullback again to the EMA, and it just rejects it over and over again. It kind of goes sideways into a trading range. This is all kind of a trading range, but it's all nothing can break above the EMA. So once I saw a test failure, test failure, test failure, test failure, I decided that this was probably going to get at least one more push down, maybe from the momentum of 52 through 58. So I sold 66, the close of 66. And I honestly, if I would have just held this through, you guys can see here, you guys can see on this that I got out kind of midway through 67 just for 10 points. And I would have been able to make all the points back that I made and then some if I would have just stayed in this trade. So it's something I've talked about before, but the market will always give you opportunities, even if it's this late in the day, to make back the points that you lose. You could have even seen the double bottom here and bought in, and I could have could have been profitable on the day, but I just wasn't willing to risk that. So I made 10 points there, took a loss here, made some good trades. But yeah, interesting day with lots of different trend reversals and kind of all a trading range day, but with just like kind of lots of pushes in the 15-minute chart. Yeah, learn from me. Don't make the same mistakes I did, but if it's part of your trading style and it works for you, go ahead. But I clearly learned a good lesson today that I'm going to push forward to make me even more profitable. So thank you guys for watching. I hope you enjoyed the video, and please leave any comments or concerns or criticism down below. And shout out Troy and shout out Al Brooks. His course will be down below. Bye.